Ladies and gentlemen, kicking here, welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.36%. Dire on the S&P 0.1%. Semiconductor, grain, Dow 0.7 negative. Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are seemingly red today. Bitcoin, gold, silver, miners positive. Dollar up, oil up, treasury bond up. VIX is down about 3%. There, let's stay with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed yesterday. It looks like we actually saw a slight gap down here this morning. And with a little bit of fluctuation, the sellers, they were able to fill that up gap completely this morning, right? And that's a good sign for the seller because they didn't want any kind of remaining up gap. It's gonna give bulls any kind of advantage. So once that gap did get filled, we did see that level acting as support here. But you see how quickly that level, you can see the short-term moving average coming down. And then how quickly that level, that bounce, quickly dwindled down. And we're back at this level here, that gap area. And we actually made slight lower low here on a closing basis.
God damn it. God damn it.
God damn it!
And I think, you know, if that gap wasn't filled, I think bulls would have a little bit of momentum to at least bring it above the short term. But once that gap got filled, bears had that momentum advantage with these lower highs here, and the short-term moving average continued to act as resistance. You can see on yesterday's price action. And once we lost that micro term right here, looks like everybody placed their stop underneath. Anybody went long and you were here, they're just all getting stopped out, and that was the last hour candle there. We have the long-term, not the long-term, but mid-term rising uptrend support coming all the way back to December, and that's kind of coming up here at around 395 or so. Obviously, that's the level that bears want to break below, and next level of support 395 is going to be kind of the band of support. As you can see, I'm going to zoom out a little bit here. 394, 395 been acting as this level was last known support here, as you can see, and that's the level we found support late last week here. You can see right there. So with the rising uptrend support and the 394, 395 pivot, this is going to be the level that bears are going to attack going into next week. For bulls, obviously, the sentiment is still looking bearish just because we got the midterm coming down, long term, the short term, and the micro term. They tried yesterday to gap it up to reclaim the short term and micro term, but you can see they were not able to keep that momentum going, with that momentum dwindling down with lower highs and lower lows. As you can see, any little pop's been met with astounding pressure. Let's check out that oscillator. And so to make things worse, we have that oscillator crossing down. That's definitely not what buyers wanted to see. This is going to make bears a little bit happy here because bears are a little bit anxious about that bullish divergence formation here, which we've been talking about in the last several days. As you can see, higher high, higher low, higher high, which we talked about extensively yesterday. And that's how this market actually tanked a week and a half ago or so, with that bearish divergence formation. So we had the exact same formation, but the opposite side of things. And so you can see this thing come all the way down without seeing any kind of cross in the middle of it for the sellers. However, buyers are not really materializing it from this bullish divergence setup, because you can see that oscillator crossing back down is not a good look here going into tomorrow. That bullish divergence is not quite completely nullified. Only way they can keep this bullish divergence setup going is if bulls can able to cross it back up. right? Like maybe tomorrow. And that for that to happen, obviously they will need to get that price getting above the micro term and the short term. We're talking 399 or so, and staying up pretty much all throughout the day tomorrow to keep that oscillator crossing back up and keep that momentum going. Because we can still say that, you know, with the lower highs and lower lows on the prices and with the oscillator kind of cultivating that higher high, we still got some properties of bullish divergence. It just now is starting to be kind of neutralized as the bears are continue to put pressure here. So bulls really got one more day to maybe make things happen here to keep things bullish divergence alive. Bears obviously don't want to hear any of this. They want to continue to push it down so that they can possibly nullify this bullish divergence by bringing it the oscillator all the way back down at least to this level. That means bears need to work extra hard tomorrow to have that continuation to the downside. But any kind of sideways move, little uptick, that could potentially have this bullish divergence lingering around, and bulls can possibly make this work. So continuation is important for the sellers. Bulls trying to not, make sure that maybe some of these this rising up to support holds, and then possibly getting back. I'm gonna come back for you. Hooray! Association. Enjoy evening globe trading tomorrow.